Good evening, everyone. I'm Christine Naidu, a committee member of Awif. Welcome and thank you for joining our Female Portfolio Manager webinar tonight. One of our areas of focus is to facilitate engagements with female portfolio managers within the financial services industry. And in line with this, ABSIP Women in Focus has convened a panel of esteemed female investment professionals to discuss and provide valuable insights into the importance of ESG in financial services. ESG has become an area of increased focus, with key questions raised on the sustainability of our world and the impact companies we invest in have on society, the environment, as well as how well are they managed and the impact thereof. This has challenged investment professionals to think about these dynamics more carefully and how it has played out in the investment value chain. Masiabi Maringeni, AWIF committee member and the head of business development at Future Growth, will be moderating our session tonight. She is joined by a esteemed panel of female investment professionals. To our panelists, we really appreciate and value the time that you set aside to make yourself available tonight. Thank you. As AWIF, we aim to serve the financial industry at large, specifically women, by contributing to their development as well as their upliftment as investment professionals. To recap, AWIF stands for ABSIP Women in Focus, a subcommittee that aims to promote and align to the same agenda as ABSIP, but specifically with key focus on women, empowerment, development, and the progression of female leaders in financial services. Our pillars under AWIF include advocacy, networking and events, governance, mentorship, and skills development. The webinar tonight falls under the networking and events pillar. Also, to touch on some of the initiatives that we have rolled out under AWIF. These include educational programs, bursary sponsorships, and leadership programs, to mention a few quite broadly. Lastly, please sit back and enjoy the robust discussions tonight. Remember, you're most welcome to pose any questions and any comments as we carry on with the discussions tonight. We aim to leave enough time at the end of the session to go through these. With that said, and without further ado, Masiabi, over to you. Thank you.
Thank you, Christine. And maybe from my side, just to introduce the panelists here with me. We've got Anne-Maree Tippo, who's a portfolio manager at 91, focuses predominantly on ESG as well. We've got Mandisa Zavala, who's the head of asset allocation at Alexander Forbes. We've got Meryl Pick, who's also a portfolio manager at Old Mutual Investment Group. And lastly, but not least, Tina Teal, who's a portfolio manager at Future Growth Asset Management. Maybe just to start off the conversation, can you ladies please tell me a little bit about your journey in asset management? What really inspired you to pursue a career in this path?
Happy to start off the conversation and get the ball rolling. So interestingly enough, it was actually ESG which inspired my journey along this path. So I have always had a strong desire for real world impact. And after being involved in a plethora of things at university, my mother told me, Anne-Maree, you actually have to do something during your career at university that is related to your degree. So I studied actuarial science, and so I found myself doing an internship at an asset manager, a very small boutique at that stage. And the first task they gave to me was to develop their ESG strategy. And that kind of started the ball rolling. I since moved on from there, obviously, because 91 is not a small boutique asset manager. But really, it gave me an appreciation for the power of capital and the power of capital allocation and how important it is to understand who holds the strings, who does the capital need to benefit, and what the objectives are for that capital. And so asset management, I think, is a really unique platform and powerful platform to create change, to influence the world, and really to look after everybody in society.
Great, thanks for that, Anne-Maree.
Sure, I'll go next. So I'm Tina Dio, as Masiabi said. I mean, I think for me, the kind of what led me into this industry was really what I enjoyed studying. So what I did in school, and right through to varsity. I was also fortunate to actually have someone close to me who worked in the asset management industry. So kind of tap into her knowledge, get a bit of a more of a feel of what this actually entails. I mean, as a kind of fresh out of high school in varsity, still trying to kind of find your kind of vibe, if I can put it that way. So I got into it in that way, got to future growth fresh out of varsity, and I think I've just I've stuck to it. I think partly to link to what Anne-Maree said, the actual real impact that it makes to people's livelihoods at the end of the day. And as much as it can be stressful and highly pressured at times, that's also what keeps me in it. The potential of actually having that positive impact on the man on the street.
Thank you, Tina. Meryl, do you want to introduce yourself and explain to us what inspired you to enter the portfolio management industry or the asset management industry?
Sure. I probably have a slightly different story from everybody else. I started my career as an engineer. So I studied chemical engineering. The closest investing is definitely not discussed at the dining table at my family. My mom was a teacher, my dad was in admin. So the closest I got to investing as a child was passionately playing Monopoly. And I went off and studied engineering because I was good at maths and science. And I practiced as an engineer in the field for 5 years, and then within banking sort of back office efficiency things for 2 years. While I was there, though, I started doing an MBA and got introduced, through my accounting professor to the idea of valuation. I feel like he was using our class for free research, basically. I think we were steadily going through his personal portfolio, assignment by assignment. That whet my appetite, So doing this accounting module and the economics module at the same time suddenly opened my eyes to a whole new world. Through doing these really simple assignments, which were to understand financials, but do a bit of primitive valuation, I was shocked. I thought, does everyone know that all this information is on the internet? Does everybody actually know that they're explaining Woolworths to you? They're putting presentations on the internet for free. If you just read this, you can try and figure out how to make money. So I think a hobby was born. And the little 7-year-old who was playing Monopoly found out there's a much more efficient way to try to grow her personal wealth. And someone in my class was at OMIG, and completely through serendipity, I put a message out to my class to say, hey guys, I'm looking for opportunities when we finish this MBA. They were launching a trainee investment analyst program. That was 2012, 11 years later, here we are, no regrets.
Sure. Very diverse, sort of inspirational stories. Thank you so much for sharing, ladies. I think women are often very much underrepresented in portfolio management. I mean, I think I was reading a stats quite recently, and it says that, even before the disruptions of 2020, there's actually been a massive slowdown in the progress in terms of gender representation in asset management. I mean, if you look at the representation at the moment, it sits at 14%, which is actually the same as it was at levels of 2019. Are you guys able to maybe say why? Do you think this is actually the case? Have you ever faced challenges within this industry, and how have you actually overcome them? Anyone who wants to start can go.
I can start. I think it's a tricky one. As I said, I started out in engineering, so I've only ever worked in male-dominated industries, and this one is certainly a lot gentler than engineering, and walking around a factory floor is something special. So that being said, I think there's an inherent challenge, whether you're a minority by virtue of race, disability, gender. I think the minute you are a minority in a room, it can be more difficult to get your voice heard. I think people, in my view, people by nature gravitate to people who they develop a rapport with. And I think it's easier the more one has in common, whether because of gender or because of race. I think those natural bonds form, and I think we are more open to opinions from people who are like us. I think those inherent biases I have maybe observed over a decade. It can be harder to get one's voice heard, and it takes longer. I don't mountain bike. I don't play golf. I don't, so if people are discussing stock ideas at the mast in Tokai, well, I'm not there. So I have to find other ways and other things in common with my male colleagues. So I think building those relationships, rapport, etc., takes longer. And yeah, I am a mom. I had to make trade-offs in terms of, it's not politically correct to say, but make trade-offs in terms of how much maternity leave am I actually going to take? How much time can I take out of the market? I'm going to work after my kids' bedtime, etc. So these are the, when you are competing with male colleagues who have maybe a very different support to you and on not shouldering the same responsibilities that unfortunately we still carry as women, one has to find creative ways to still compete.
Thanks for sharing that, Meryl.
I mean, I think if I can add to that, I think we all in sort of male-dominated industries face similar challenges, and it wouldn't be unique to me. I mean, to this day, I'm in very male-dominated meetings at times, where I'm either the only female or the only female of color. So, it's the landscape, I guess, we have to operate in. And linked to what Meryl is saying, that you find ways, I guess, to kind of overcome those. What I do try, though, to do is to be true to myself, who I am. And I think it's key to also trust your gut, trust your gut, trust your instinct. If it doesn't sound right, if it doesn't feel right, listen to that inner voice. So I truly try to live that way. I think something else that helps is to just for yourself be clear about your own objectives and goals are. So yeah, it's just then, I guess, a bit easier to chart your path. And I think, having support is I think, immeasurable. Have a mentor, have a sponsor, have someone who will get into rooms that you might not be in, who will mention your name. So I think those are things that I kind of keep in my arsenal to try and overcome those challenges.
Yeah. Okay. Thanks for sharing, Tina. Anne-Maree?
Thanks, Meryl. I mean, my sentiments are very similar. What I can say is something special that's happened at 91 is that in my team, the SA Equity and Multi-Asset team, sort of, let's call it 8 years ago, there's a very deliberate team restructuring. And so currently in my portfolio management team, I think there are more women than men in that team. And so it's a really interesting, robust, quite beautiful, frankly, dynamic. And I kind of get the shock of my life when I go to conferences, etc. And I still, it's just a room with me and as Tina said, a round table filled with white men. And I have to kind of check myself and, figure myself out, line my shoulders above my hips, above my knees once again, because it's very different to my day to day. And sometimes that's quite interesting. Your experiences are not consistent as you move through different places and move to kind of different meetings, different events, different contexts, clients, management meetings, conferences. Everything is always different. And so you're always on your toes trying to figure out what ball is going to be thrown your way next. which I think is a little bit of something mostly women have to deal with. That every context is different, and every context you kind of have to prepare for a plethora of different things, which may not be the same for our male colleagues.
Yeah. Thanks, Anne-Maree. Sounds like there's a bit of a, parallel there in terms of just like bringing yourself to the party. It sounds like you're saying, embrace the challenge, look for people that can support you in this road, and, just find ways to balance your work, be true to yourself in terms of balancing your work life and your home life as a woman, and actually teach men how to actually treat you. I think it's what I'm picking up from there. Sadly, Mandisa is still not audible. We apologize about that. I think we're going to move on to the next question. So, I'm interested to hear. Tina, you talk about who you are. You working for an asset management company, such as the one that you are, ESG. How do you actually incorporate, ESG into investment decisions and portfolio management strategies?
Sure. So I'll talk firstly just about our general investment process. So, at Future Growth, we're in the fixed income space. So we essentially lend money to businesses to generate returns for our clients. And part of that, being a debt investor, is your upside is pretty much limited. You're just waiting to get your capital and your interest back, but your downside, you can lose everything essentially. So really, we focus on identifying risks and trying to mitigate those risks, whether it be through financial analysis and also non-financial, which is where then the ESG and ESG factors come in. So really, it's about identifying those risks, which could also translate to financial, in fact, even though they're non-financial in nature. So the way that we have, tried to mitigate those is where we can, we contract for those things. So we would have a pack of finance documents, for example, with whichever borrower we're dealing with, and try to contract in those conditions. So, for example, in the unlisted or private sort of owned company space, you'll find that the board of directors of X company may be a five-man show with no independence. And so for us as an institutional investor, investing money, on behalf of our clients, that we do want some independence in there, kind of an extra set of eyes, kind of working more independently of, say, the owners who may be the managers, who may be the directors as well. So that's, one of the things that we try and do. We try and engage with the companies that we fund. In those instances, perhaps if they have a small, relatively unknown auditor, and as the business grows, we may ask that, get a mid-tier firm in, just to really help us safeguard, essentially, the assets that we've been entrusted with by our clients. So those are, kind of the sorts of things that we try and do. But obviously, the key part is actually uncovering what those non-financial risks may be.
Thank you, Tina. Yeah, that's interesting. So you don't actually look at it as an ESG per se. It sounds like you're saying you've changed the terms to non-financial benefits. Anne-Maree, can you share your insight around ESG and how you incorporate it into investment decisions?
Yeah, so maybe if you allow me, I can just share a little bit more broadly, as Tina did, about what we do as a firm. And I think they're kind of three prongs to how we look at sustainability or ESG. The first is you can have a sustainability type fund, which really looks for sustainability opportunities, whether it's in kind of resource efficiency, renewable energy, and we have those types of funds which are actually run out of our office in London. So if you want to go and give it a Google, it's Sustainable Environment Fund, etc., which have clear ESG goals linked to the return profile of the fund. The second aspect is our firm-wide commitments with respect to net zero. So we've made quite bold commitments there, and being part of the Net Zero Asset Management Initiative, we have quite a unique seat at the table because we're one of the only emerging market players in that initiative. And we kind of understand the story around you can't kind of decarbonize by disinvestment. You've actually got to assist in the transition process, and transition finance is a really important part of the story. And so there's that overlay in terms of how we look at ESG in all the funds across the world, but obviously specifically in South Africa, because we have high emitters here. The bulk of our high emitters for our business sits in our South Africa kind of equity portfolio. And so that process of assessing transition pathways, assessing plans, kind of the level of ambition, the credibility, the implementation pathway, that's really important. Then the third thing, which I think is something everybody can relate to, is ESG integration. And ESG integration, I think it's important to be consistent, or that it's consistent with a team's investment style or investment philosophy. So lots of equity houses in South Africa, there's a value investing style. So it would be important that ESG factors and considerations and processes match that. For my team, we have a little bit of a different style, and our tagline is earnings revisions at reasonable valuation. And so when I'm looking at ESG factors, I am looking at what in the environment, what around social, what around governance can actually affect the earnings line, and therefore the revisions potential of that earnings line. Similarly, what around those things do I think will impact the valuation for whatever reason? And so there's a clear link and correlation to my investment style and philosophy. And it's not just an ESG rating, which can often be a blunt tool, useful, but blunt in terms of understanding the underlying ESG dynamics of the fund, of a company or an equity holding, and as that pertains to the investment case. So an example, today I was meeting with a real estate company, and we were talking about energy security, their solar PV installments, how that will actually affect their cost line, how it will affect the costs for their tenants, and actually make them a more desirable landlord because they can make the price of energy cheaper for their tenants. And so there are all of these things that will obviously then flow through to the income statement and impact earnings. So I think those three things are kind of the pillars in which I look at ESG. And really from an ESG integration perspective, it's really tying those factors to your investment philosophy. And that can be different for every investment team will have a different way of looking at that, I think.
Yeah, that's quite interesting, Anne-Maree. So you're basically looking at you want to do well by doing good, but so to engage me a little bit, so you go into the conversation looking for the specific S or E or G that you actually need to change to impact your returns, or do you discover it as you're having these conversations as an opportunity for you to actually improve?
So both,
or is it a combination of both? Yeah.
So in the actual investment process, as you would in any normal kind of analysis, you will uncover the E, S, or G material factors and see whether they apply to that company. What are the potential, swings and roundabouts, etc. On the other hand, because we do want to do good, and we also recognize that by improving those things, you improve the ecosystem in which companies operate, therefore hopefully providing a sustainable kind of universe for investment returns in the future, we'd engage with companies. So engagement is a huge piece to how we look at ESG. So but we can chat about that later.
Engagement, that's coming through quite strongly from both you and Tina. Thank you. Meryl, from your side, are you able to share sort of like an example of an ESG related investment decision that you've made, and can you demonstrate in both from sort of like what impact it had and also what the financial returns were?
Still muted. As the two ladies have shared, it does have to tie into your investment philosophy. So within our space, we look at things through a theme lens, a price lens, and then we look at the roadmap as to how we expect this investment to unfold and the risks. So within each of those, I think the overarching phrase that we use is not everything that counts can be counted, and not everything that can be counted counts. So I think when it comes to if you're looking at things purely through can I value this, you might kind of miss things out. A very practical example of something you can value now, because a lot of the information has been given, is, for example, Sasol and what the potential carbon tax implications are on the valuation. Now, at some point in time, not all of that information, when it's just kind of in the stage of being touted, talked about as a potential that would fit into a risk, or if we see enough development as a negative theme. So even for us, when something shows a lot of valuation, or there's it ranks highly on attractively on price, but if it's got an overwhelmingly negative theme, we would basically manage the risk of that by holding a smaller position size. We don't exclude anything. So I think Sasol is an interesting case. So if we go back to the height of COVID and approaching November 2020, Sasol was around 100 Rand. And that was being driven by kind of oil price factors, etc. around the time, balance sheet factors, as well as the ESG implications. So we looked at it holistically and said, what can we value from a carbon tax point of view? What is our view on the oil price? What is our view on the balance sheet? So ESG in that instance forms part of one of the many themes, risks, issues, etc., and what we can value. And we made a call that given the extent of value that is offered in this share, we think it's attractive enough, despite the long-term, risks to cash flows due to ESG, and despite the issues that they have to fix. Once we make a decision like that, though, our engagement dials up dramatically, because we believe in being responsible holders. It is one of the only few ways one can play directly in oil in the SA index. So if we have a view on oil, we do not think that we can afford to exclude clients from that alpha. But once we've gone ahead and said, well, we're going to add this to clients' portfolios, we're going to give clients the returns, but we need to be responsible holders. So we engaged with Sasol. We were quite frank with them that their disclosure and their targets were insufficient. During the period that we've been holders, they've tripled their targets in terms of GHG emissions by 2030. We've been putting pressure on them, along with other big asset managers in the country, to incorporate these things into their incentives as well, into management incentives. And when we do the valuation side of things, we put a discount on to cater for that. So that's how we deal with that. I think in instances where you have multiple options, let's go to the clothing retail space, for example. At some point, in understanding the companies like a Truers, like a TFG, we noticed a trend where TFG was investing a lot in local manufacturing capacity. Now, it's a great example of doing good by doing good, because it's actually been a good business model for them. They've been able to, better manage their inventory write-offs, their markdowns. They've been gaining market share because they're responsive to demands. But at the same time, they're doing this fantastic job at actually creating jobs, in KZN, in the Western Cape. And when looking at an example of a local retailer that's kind of shrugged their shoulders and said, oh, we can't work in this country, we're going to continue sourcing from China, when actually that's against kind of global trends. So it's actually just bad business. But also when you talk to the TFG team, they're actually quite passionate, and the people they have at these factories are quite passionate about improving the skill level and investing in world-class equipment so that we can compete with the Chinese. And it's got a positive business impact. So that to me was like a beautiful example where we made returns, we backed the market share winner, but also they are genuinely doing good. And every time the share looks expensive in my portfolio, it like breaks my heart a little bit that I have to trim that position, because I believe in what they're doing.
Okay, thanks, Meryl, for sharing those examples. I think you've really touched on my very next question, because I mean, a lot of you have been talking about engagement, and I think you alluded to some of the methods that you adopt there. But even before I actually get to this question, I see Mandisa, you're up. Mandisa, I'd really love to give you an opportunity to just introduce yourself and maybe just briefly talk through some of the points. If you've heard everything that we've said, Mandisa, do you maybe just want to give it a go?
Oh, I'm really crossing fingers that it's working now.
It's
Okay,
working. We've prayed internally. We can hear you clearly.
so much. Thank you so much. Yeah, Mass, I mean, I'm quite happy to sort of tackle the question that you just asked now. But yeah, maybe introducing myself, I am Mandisa, as Masiavi said. And yeah, I was trying to sort of talk earlier about how I got into the industry, but cut the story short, I'm here now and quite happy
Mandisa, we really would love to hear how you got into the industry. I mean, we've got a lot of young professionals here who might be inspired by your story. So please do go ahead and share, but just maybe try and keep it a bit brief.
Yeah, absolutely. I think when I went to varsity, I was going to study something completely different. And I had to sit down with the dean because I realized as I got to my university that they didn't offer what I wanted, which was actuarial sciences. And that's how I got into economics. I ended up studying economics and information systems and some statistics. And eventually that led me to this career. Love economics. And I started off as well, you know, a baby at Allan Gray. And then I moved up, that was a single asset manager, went into multi-management and eventually landed up at Alexandra Forbes. So it was by accident, but it's been a really, really beautiful journey. I don't regret that mistake that was made. Yeah.
Great. Thanks for sharing that, Mandisa. Then now maybe you can talk maybe around engagement with companies. You know, engagement is a big theme. You know, how do you actually encourage better ESG practices and outcomes, and really share with us the methods that you've actually used to be able to engage in an effective way?
Absolutely. So I think for us, when we look at ESG, really, the most important thing, I think, you know, obviously there's the environmental, the social, the governance side of things. I think the social part is something, particularly in South Africa, that is very, very core. And as a multi-manager, you know, when we go out, one of the things that we try to do is we try to buy, well, not necessarily buy, but source out management teams that are strong. So you're almost buying intellect. And the way in which you can do that is by trying to get a team that has very strong decision-making processes. And so for us, we look for inclusivity. So we know that, you know, we're a big firm and we make a difference from a South African pensioner perspective. And so it's important for us to voice out things like when we meet with the team and we feel there isn't any diversity, that we voice that out and we ask why that is the case, because I don't think we lack female graduates in our space. I think the truth is that the opportunities are not necessarily given to people holistically, and I say that not necessarily trying to shy away from the fact that maybe from a skills perspective we might need people that are more skilled, or females might need to upskill themselves. But essentially what I'm trying to say is I needed someone, and that was a man, to say, you don't know anything and I will teach you. And I think it's essentially that our industry needs a lot of people like that, that will say, you know what, we know that you don't have the skills, but our industry looks like this and we want to transform it. This word again, we want to transform it. And the only way we can do it is by giving opportunities. And so that's a long way of saying for us, inclusivity is important. There's been numerous articles that have been published about how including females is beneficial, even from a bottom line perspective, profits, right? Because the decision-making process is strengthened. And I said initially that we want to buy into strong teams. That's, as a multi-manager, that's what you want to do. And so of course we're going to want teams to have very strong, diverse views, because that essentially means that we get the best out of everyone. And so, you know, we've released this huge transformation policy that says that we have managers that we invested in, but in a couple of years, we're going to have to sit down and say, perhaps maybe we don't want to invest with you if you're not aligned to this agenda. And we haven't done that by excluding people. So we don't also go with the exclusion conversation. We sit and engage with them and say, what are the issues that you're facing? Because we can see that you're aligned with us in terms of trying to change the industry, but you're not getting there. What are the issues? And where we can help, we step in. We've got a very strong manager research team, and we've got people that engage with these individuals and asset management firms, especially the young ones that maybe might need help. So yeah, that's essentially what we've tried to do on our side.
That's great, Mandisa. I think you've touched on a lot of that. I mean, for the purpose of time, I just want to find out if there's anything pressing that any one of the panelists would like to talk about as it relates to how do you actually engage with companies around ESG, and which methods have you actually used that's been effective outside of what Mandisa has just said.
Yeah, I can just chip in that from our perspective, we really find the most powerful tool is incentives and in changing behavior. So even the TFG example that I made, you know, at some point they were not measuring things like returns, we felt, adequately, which benefit shareholders, who are pensioners in many instances. And yet, when one looks at the level of remuneration that these executives earn, you know, as someone who grew up in a much humbler circumstance, you can look at this and maybe growing up, you look at this and you think that's big capital, that's the man, you know, that the working class communities love to hate. And yet those of us who started out in these communities and now are sitting across the boardroom table, you're actually in a position to influence the bonus of the man. So we take incentives very seriously, whether through the ESG metrics, but also actually just holding people truly accountable for delivery and not letting people get away with being soft on executives. So we use the tool of engagement one-on-one with boards. We use the Remuneration Committee, and if needed, we use our vote to vote remuneration policies down.
Yeah. Okay, that's very interesting. Yeah, and I think there has been some of those models that have actually been adopted internationally as well. I mean, if I look at like Apple, you know, they've moved to actually tie their sort of executive pay with like ESG considerations as well. So definitely something that can be implemented in South Africa as well. Should I move on, or does anybody else have anything pressing to add with regards to engagement, effective models that can be used?
The only thing I'd like to add there is I think it's important to recognize that in South Africa, we have sit with a bit of a privileged position in the structure, in that the structure of the market allows big asset managers, in particular 91, Old Mutuals of the world, Alan Gray's, Coronation, etc., to really have strong voices at the table when we have large holdings in companies, and even when we don't have large holdings in companies. And so we found that to be an effective strategy to continue and consistently engage with boards and management teams, even when we own nothing of the company, because there's a large chance that in the very near future, we could own a significant portion of the company. And I think it's this mutual understanding of it's, you know, there's a bit of an ecosystem here, and we all have our part to play consistently. And we found that really, almost, I want to say, milking that in the South African industry has created huge change compared to what you can do globally when a portfolio owns, you know, can own 200 stocks, and it's not the same in South Africa. So yeah, even when we don't own companies to engage, I think has also been a very powerful tool.
Very interesting. I'm actually sitting here thinking, has any CEO in South Africa ever been fired due to maybe, you know, over ESG issues? Something to ponder on. But if any of you actually do know, I mean, it would be good to share it.
Definitely G issues.
Okay.
I think when I say that, a number of names can probably come to mind for the audience.
Yeah. Okay, thank you for that. Okay, I'm going to move on now. So I just want to ask you now, in terms of, you know, can you actually discuss any sort of innovative strategies of products that you've actually developed that particularly speak to the ESG element in terms of the investment process. I mean, Anne-Maree, I know you've talked a little bit about it in terms of, your products that you're housing in London. Tina or Meryl, would you like to add anything there in terms of the innovative strategies that you've adopted?
I can start. I mean, I work specifically in the listed equity space. As a broader group, OMIG has been a pioneer in terms of alternative investments and renewables, supporting education, etc. That's been a driver for more than a decade. Infrastructure investment, and then I think more recently in the listed space, we have launched a global and a local ESG fund that screens and ranks and invests quantitatively based on ESG factors. Obviously, in the fundamental business, we've built it into our qualitative research in terms of ESG integration. It started off as ESG research. What used to be ESG research is now actually just research. It's part and parcel of research, like you would research any other risk or any other industry driver. But then I think something that is unique to Old Mutual Investment Group is our ESG team offers a standalone listed equity stewardship service. So to other asset managers or to clients who need that sort of oversight and guidance when it comes to how to manage engagement or how to manage proxy voting, for example.
Okay, thanks, Meryl. Tina?
Yeah, I mean, from our side, two of our flagship, funds with 20+ year track records now, the Infrastructure and Development Bond Fund, as well as our Development Equity Fund, focus solely on investment into developmental and infrastructure type investments. Those mandates are, clear on that. We can't put anything in there unless it meets those requirements. Another product we launched 2012, I think it was, when the whole renewable energy kind of wave was starting, before the first round of deals in fact came to market. We went on a drive to actually figure out and understand what is this new plan that government is bringing. What is the framework legally? Are the guarantees that National Treasury supposedly is going to offer, does it actually hold water? So our Power Debt Fund is, I think, almost 10 billion rand in size now, purely domestic, focused specifically on renewable energy. And I think just generally we focus on trying to do transactions, lend to businesses that essentially do good for for society, for the environment and so on. But the key is that commercially the returns must make sense for our clients. So we don't we don't play with that, but we really do try and create the impacts that our clients like to hear those stories, and you can see it in all of our portfolios that we invest. So I think that's really the main thing. There's numerous things in the market coming out: social impact bonds, sustainability linked notes. There's a lot happening in the market as well. But yeah, we try and participate there, but on the unlisted side as well, do more affordable housing, like Meryl mentioned. We are quite big in that space as well. And I think we also try and lend to smaller businesses. Small is relative, I know, but smaller in the context of the listed market. That we actually see are doing good and have sort of a sustainable trajectory, I guess, that they can achieve. So funding partnerships that we've entered into with other funders who perhaps have, for example, we don't have engineering expertise here, but we can fund construction projects by tapping into, doing partnerships with other entities who do have that skill, and we bring the financial element to it.
Okay, thanks, Tina. Mandisa, as an organization, how do you actually measure impact of your ESG investments on the environment and society? Do you work with any sort of external organizations or experts that can help you to quantify these impacts?
We don't work with anyone, but all the work is done internally. I think for us, it's a bit more easier in that we've got specific targets that we're trying to reach. So when we engage with asset managers, for example, we already know the number of Black individuals we want to see in a team, the number of female participation we want to have in a team. And so it's easy for us to then go back and say, is this actually in line with what we've asked for? And this is something that we actually do periodically. We go back and I think I'd mentioned earlier that we also engage as well with some of the guys that maybe may not necessarily be showing the kind of direction that we would want. And we sit and actually talk about that and ask perhaps maybe what are some of the issues that they might have in meeting the numbers that we have. So measurement for us is a bit more simpler because it comes down to the numbers. You know, you can talk a beautiful story, and I think that unfortunately that was the case over the last couple of years, where everyone spoke about how, you know, we want to see a beautiful South Africa where, you know, we've got we're sitting in a boardroom and we've got 50-50 representation, but we've also got a demographic that represents what we have in South Africa. And that was a beautiful story, and it was okay for us to hear that at the time. But we're like, hold up, you know, well, we're in year 10 and you can't be telling us the same thing. You know, sooner or later, the numbers have to show. And of course, some of the people would talk about how, you know, it's difficult to source out talent because everyone is going for the same person, and all of that. And I think, you know, one of the things about good a corporate firm is that they try to sort of overcome some of those challenges, right? Because essentially you want your firm to be able to participate throughout the business cycle. When we talk about investment, you want a business that's going to be there when things go down and when they go up. And so essentially you're saying, okay, cool, we understand that 10 years ago, this was the issue, but how have you guys solved it now? And that does mean that sometimes we have to interrogate some of these things. And maybe it may not necessarily come out as you know, in the best way possible when you start to do it. But I think we've received very good interactions from a lot of our asset management managers, because I think it's been a conversation that's been in the cards for a very long time. So yeah, to answer your question, it's very easy. The numbers don't lie.
Okay, thanks, Mandisa, for that. I think it leads in very well into this question around, you know, trends and challenges that are facing the asset managers today. You know, a lot of times we talk about the environmental issues that are impacting us, but it's really the S. And, you know, the S in ESG is quite difficult to solve, you know, because you're talking about issues of inclusion, of diversity. You know, how do we actually find meaningful solutions in this space? I'm interested to hear from sort of the asset managers representatives, Mandisa, before I touch on you, but I think you've touched on it briefly. Anne-Maree?
Yes, I think besides the actual ESG challenges, the challenge we have is, are we and our clients aligned in objectives? You know, so we get our fun fact sheets go out every month, and we get scrutinized and measured on the investment performance on a monthly and a quarterly and a yearly and 3-year, et cetera, et cetera, et cetera. And so we can sometimes have more systemic ideas around investment decisions and choices, but that might not always align with the short-term measurement. And so the important, really like kind of crux of the matter for us is, can we bring our clients along with on the journey with us? And it's not about trade-offs, it's still about achieving good returns. And therefore really galvanize both kind of arms of the asset ownership, as it were. The manager and the actual asset owners, and realizing kind of who the end beneficiaries are and how the capital, the utility of the capital in that investment cycle actually looks for those end beneficiaries. So that's kind of one of our biggest challenges. Actually, it's not it is the specific E, S, and G factors, but it's can we be aligned with clients? And actually, more recently, we're seeing incredible. I want to say take up, but that's the wrong word. Partnership with lots of the big asset owners, in particular, multi-managers as well. The launch of our credit infrastructure fund to address infrastructure deficiencies in the country and the liquidity concerns for bigger asset owners. It was a response to that sort of partnership and that response to kind of social issues. So it's a small example of, I think the power is in the partnership, and we can kind of develop innovative solutions and address specific issues there. Yeah, I'll leave it there.
Okay, great. Thank you so much. Is there anyone else that would like to maybe add on to what Anne-Maree has said, just around the social imperatives, partnerships with the asset managers, I'm sorry, pension funds, who are the people who actually own the assets? Is there anyone else that would like to embellish that, or maybe add a different point to that?
Yeah, I can add to that, Masiabi. I think, a big challenge for us is measuring the impact, right? And I think it's not exclusive to us, particularly in some of the funds I manage, for example, we have 100 different, companies we're invested in. So actually getting that data from each company to actually then roll it up onto a fund basis is a challenge, but it's a challenge that we are taking on. I mean, recently we did a sort of a data drive to get job creation information, for example, from I think it was about 80 odd of our companies. And we actually found that, it was really an SMME story, that those are the people that are creating the most jobs, and which is not really dissimilar to what we hear kind of in media when government even makes statements. So it's gathering the information with such vast sectors that we fund. Yeah, it's a challenge we take on, particularly in the unlisted space, where some of these entities you can't Google and find out much about them. So it's really about digging, engaging again, like we've spoken about with management, tying them into providing that reporting on a monthly, quarterly, semi-annual basis, to actually try and build that database of information that we can then share with our clients. It's maybe easier in instances where we've invested in affordable housing developments, for example. There's a building there we can show you, we can tell you how many families are living in there who perhaps were living 30, 40 kilometers away from their places of work before. But yeah, that's the easier bit. It's now the other types of information that we actually want to try and get out of our borrowers.
Okay. Thank you, Tina. I just out of interest, how do you actually communicate your sort of ESG-centric investment approach and strategy to your clients and stakeholders? What medias do you use? Have you faced any challenges in terms of how your actual clients engage with you? Have you found yourself wanting, and have you done something about it, or is it too difficult for you? Please share with us the journey in terms of that engagement with your clients around what is it that they want from an ESG perspective.
Perhaps I can kick off that discussion. I think it's vast and varied because we have an array of different types of clients. So obviously in your institutional space, typically, let's just use pension funds as the proxy there. They're the largest component of the institutional space. Your bigger pension funds are quite demanding around what information they want, how they want it presented, questions to ask, and it's quite encouraging. I did my master's thesis actually at the Graduate School of Business about 8 years ago, looking at why pension fund boards were not adopting ESG into their criteria at the time. And so now when I look at RFPs or due diligence documents, etc., it's really encouraging to see that the level of questioning has become a lot more sophisticated and a lot more nuanced and a lot more outcomes based. So anyway, back to my point. Those larger pension funds, they really are driving the conversation, and there's a great communication flow there. I think similar to most of the people on this panel, there'll be that experience of consistent communication between managers and asset owners, managers and multi-managers, etc. And so there's good communication there. As you kind of go down the sort of the curve with respect to pension size, there tends to be lots of other issues pension funds are dealing with, and so ESG processes or philosophies, etc., are lower down the list in terms of their priorities, in terms of even just the administration of the pension funds. And so that type of communication becomes trickier as you, and in the case my team, would like to really enhance and educate and kind of build more momentum with respect to ESG and sustainability in the industry as a whole. Then you have your kind of retail side of the spectrum and your DFMs, and there seems to be very little appetite in that space, which is kind of contrary actually to what we're seeing from a social media or a rhetoric or a news perspective, where all your millennials, etc., are pounding the table. You know, they want their investments to do good, but the types of queries and the types of sophistication, or the level of sophistication, we don't see a lot of that from that particular market. Now, that could be the structure of the South African market, as opposed to other kind of, let's call it, markets in the global north. And that's an interesting distinction, the level of appetite for sustainability and ESG from retail versus institutional.
Very interesting. Thank you for sharing that, Anne-Maree. Is there anyone else that would like to talk about this whole communication, especially what Anne-Maree is talking about here in terms of these smaller funds? You know, could there potentially be, you know, an opportunity to collaborate between, you know, different asset managers in terms of making sure that we empower and we ensure that the younger or the smaller pension funds are also able to participate and build up this, you know, ESG policy so that they can benefit from what the bigger pension funds are benefiting from as a result of including ESG in their investment policy.
I can add to that. I would concur with the distinction between the retail market and institutional market. Definitely, you know, not to call anybody out, but some of the state-owned entity pension funds have been world-class in terms of demanding, and probably they have forced us even years ago to up our game in terms of ESG integration. And actually, as an investment team, I would say we were probably guilty 5-6 years ago of paying it lip service. And through being pushed by clients, you know, I was the person at the time to drive that, to say, because it was my client, to say, guys, I can't go back to this client and tell them stories. I want to tell them the truth. So we have to actually roll up our sleeves and do this seriously. And it's an interesting thing, because even within the investment teams, people want to take it seriously, but it's this dealing with the tension between when you see something, but actually it's the only company you can invest in to give you those returns. And you're torn between, well, how would I explain this to my teenage daughter? But yet I need to deliver alpha to the client. And the solve for us has been the engagement piece that says, we will see the issue, we realize we operate in a narrow market, we have a fiduciary responsibility to give clients returns, but we will not turn a blind eye to what people are doing. We'll be owners, and we'll use our ownership, you know, we'll be active/activist-ish owners at times. And I think what Old Mutual's done, which is open to various scales of trustees and pensioners, there's an annual Tomorrow event and a publication that goes hand in hand with that, which seeks to educate and expose and push the boundary of conversations around ESG. And I think there's a bit of a knowledge transfer, let's say being led by these relentless and cutting edge clients on ESG, which then push us to improve. The smaller clients benefit from that anyway, because when you then are doing client communication, these things become built into the way that we, you know, speak, and they certainly benefit from the engagement piece that we would do.
Okay, thank you very much for that. I think I want to move on to this question around you know, the relative way that males or females approach ESG factors. I mean, in your experiences, have you seen any difference in terms of how men incorporate ESG factors into the investment decision-making process? Meryl, you're smiling there, so I'm not going to look at you.
We're trusting Anne-Maree. We're trusting Anne-Maree here.
Yeah. I'm deciding how much to share on a public platform. Anne-Maree can go first. I will add.
I'll kick off once again. Maybe two distinctions here. like sort of mainstream, well, not mainstream, sustainability teams. I think many asset managers have sustainability teams, not just in South Africa, but globally. So ESG/sustainability. Those tend to be predominantly women. So it's hard to make the distinction of whether there's just not enough data points actually to really make a comparison, but that tells you something already. I think within the actual kind of call it mainstream portfolios or funds, so not ESG specific funds, not sustainable labeled or impact labeled funds. I think women take to it a little bit more easily. And I want to say there is a little bit of a bent just to a more holistic approach of kind of looking at everything. And we see this not just with ESG, we see it in looking at retailers. I mean, we go to shops. Well, typically, maybe it's in the South African context, it's normally the woman who goes to do the grocery shopping. And so there's a better understanding of that actual dynamic of the shopping mall and the retailers and who's doing well and what products they're offering and at what price points. And so there tends to be different information inputs into the thinking. And so I'd like to, there tends to be a little bit more of a holistic approach there. And so ESG is kind of easier to incorporate there. I mean, that being said, it takes a lot for people to kind of get their head around what this actually means, and that it's not just a kind of a layer you're adding on top of an investment process, that it is intrinsic to your investment philosophy and your fundamental research, like Meryl also alluded to. So I may have gotten myself into a lot of trouble there. But on the sustainability kind of purist front, I'd say if I walk into a room, they're 95% women and 5% men, so it's hard to do that comparison. And in kind of mainstream funds, I think evidence is wanting of equal understanding and equal adoption. I think, to be fair, 10 years ago, women were the first adopters. Now, because it is actually so pivotal, there's a lot less angst now. And maybe to be fair, that's the distinction I can make. The journey has been that we're more on an equal footing now from a male-female perspective than we were 10 years ago. Maybe others have different experiences.
It sounds like you're saying we need to advocate for more women, in the sort of investment space, because as more women bring about these different ways of thinking, men sort of like now start seeing the world differently. And that's why diversity and inclusion is so important, so that everybody has an appreciation for how different, the world can actually be. Thanks for sharing that aspect, Anne-Maree. Meryl, you sounded like you were wanting to come back to this question. Should I move on? I know that I've got questions also that I need to address. There's already like 5 questions in the Q&A side of things. So let me know if you want to answer this question or whether we should move on to other questions.
No, I can venture and answer. So I think when I started at OMEG 11 years ago, our fledgling kind of investment effort and RI office was led by a white male by the name of John Duncan, who was a civil engineer and who had left industry and joined, and he really did a phenomenal job. So here was an example of and I think I watched, as Anne-Maree said, the journey of skepticism so he was running the sustainability office, and then, in the kind of the PM, the fund manager cohort, I think initially the attitude was a little bit of, what is this tree hugging nonsense, but that was literally 10 years ago. I think people have always typically taken the governance seriously. And certainly for those who forgot for a minute that governance was important, Steinhoff was a big lesson, followed by Tongart. But I think on the E part, once you can start to tie it to, actually, this is going to affect your performance, your clients' returns. Because I think often, Anne-Maree touched on it, that the ESG goals, they're such long-term goals, they're 10, 20, 30-year goals if you take net zero, and yet we are reporting to clients sometimes on a monthly basis. So there is that mismatch. When, I think it was 2017, 2018, when VW had those scandals around their emissions and cooking the results of the emissions. And you just saw the share price, collapse. That was another big eye opener, that actually you take G seriously, but yeah, you need to take E seriously. Even if you look at Lonman and the Marikana, incident, that is a massive case of what the S can do. So I think once it starts, you just need a few of those examples. And even your most hardened macho fund managers start to realize that, okay, it's going to hit my alpha. There's benefit in this, in taking it seriously. I can weed out a risk if I can hold Anglo-American instead of Glencore, because Glencore is going to come with fines and scandals. And those are the choices we've made, and we've at least saved clients from losing alpha. But it's definitely been a journey. I think in the beginning, women were more amenable and open-minded to it.
That's right. Can I just add one more thing? I know you want to move on, Masiavi.
No, please do.
I think just to add on to what the ladies have said, I think definitely ESG is a long-term investment. Essentially, you're investing in the long term, and you may not be able to, I think Tina had mentioned that, even quantify whether or not it's working right now, but you know that over time, if you continue in the same direction of work. That being said, I think for me, what I've seen in the differences in this gender conversation that you had between males and females, I think both, to a large extent, not everyone agree that it's important. So if I were to give, a tick, I'd say important, definitely males, females, definitely tick. But I would say I find that the urgency part is more on females, this conversation of it's urgent, because everyone talks about how important it is, but it's like conversations like this, you find that it's the women that are always going, yes, agreeing with the fact that we need representation. We need to make sure that we're starting, from the bottom and building up the kind of representation that we have in the boardroom. And that isn't something that is unfortunately on both sides. And obviously I'm generalizing here because it is different. I think with the retail conversation that was had earlier, it's interesting, my first job, I won't mention what it is, but I had mentioned it earlier. I was also in the retail space, and I'd just come out fresh out of varsity, and there was this one client that would send an email every quarter after we had published our quarterly update, and he would say, yet again, I have not seen, I'm still seeing the same people, and there is no, you guys have not beefed up your team. I'm not seeing a Black female representation. This was a white male. And I mean, we would crack in the team when we saw that, oh guys, oh my gosh, did you see, he sent this? Because we didn't know the importance of what that meant. Because for us, it was just like, dude, like, this is a great article that's being published. It didn't matter the fact that someone else was in, someone else's picture, someone else had written it. And I think I sit here now and I'm just like, man, I wish I had gotten it then. I wish I understood what this man, I mean, he was reluctant every quarter writing the same email to say, why have you guys not shifted? And I look at that asset management firm today, and my goodness, like, had they not had pressure from those clients, maybe things would have not changed. But now you're seeing representation, you're seeing Black portfolio managers, female portfolio managers that are there. And I think sometimes it does come from a place of uncomfortability and saying it's urgent. And I think that is the voice of the female in the room that says, I know we agree that it's important, but it's also urgent.
That's so powerful, Mandisa. I mean, you're making an example and you're talking about a white female standing up and saying this needs to change. And I mean, earlier somebody referred to a male person that had actually played a big role in terms of making sure that from a transformation or ESG perspective, there is that commitment. Where are the females in the room? I mean, what are you doing in your own spaces to ensure that, you're implementing the increase in diversity and inclusion, and what has that actually done for you in your own different teams? I really would like to hear from each one of you on this point. I'll start with you, Mandisa, since you're already committed, and I know you've alluded to it a bit, but maybe if you want to elaborate.
My goodness, I was hoping Anne-Maree would save me again. I've sort of used her now as a way to just take a break. But I think that's such an important question. And you know what, Masiabi, I'm not going to lie, it challenges me all the time. Because, you know, I'm in a space where, you know, Meryl had said, you know, we've got humble backgrounds, humble beginnings. And at the beginning, it was all about just being able to make the right salary so that you could support family, so that you could make your family proud. And it just was that. And then all of a sudden, when you're in the space, you just look around and you're like, man, no, this is not the legacy that we want. And in fact, it's uncomfortable being in the room and I'm the only person that looks like me. And, you know, are other Black females, are other young females going to look up and say, oh, I want to be a portfolio manager because they see other people that look like them? Maybe not, you know, and I think the pressure is there to always want to do more. And the truth is, you know, there are certain things that I do get involved in from my own personal space, you know, investor education, which I'm very, very passionate about. And also things like just making people aware of, I guess, the financial industry, because when I grew up, I didn't even know that that was something. I just knew being a doctor, you know, being a lawyer, being an accountant, you know, as I said, I stumbled upon this career. It wasn't something that I was going to do because I didn't have the knowledge. And I do find that knowledge is power when it comes to people that don't have that background. And so that's a way in which we play. But I think also within my own, within the workspace, it's just making sure that these conversations are had and not shying away from them, because you can get tired of always being that loud voice that's always asking, why don't we have X amount of females in our team? You know, like, why is our team lacking in this? And sometimes it can get frustrating because perhaps maybe you're seen as that person. And it's not to say that is the case, but you might feel like you're seen as that person that is just not necessarily kind of, you know, going with the theme of the team. You know, you're always challenging. And I think it's important for us to do that. It's important for us to ask questions around, are we prepared to hire the Black female that doesn't have skills and upskill them? You know, is that something that we're prepared to do? Are we going to sit around and just say, well, we want the most qualified? And I've heard these excuses. We just want the most qualified person for the job. But the truth is, we're not going to be making the long-term change if we're not prepared to say, this is someone who's got potential. Obviously, they need to tick certain boxes in terms of passion and everything, but to say, I'm going to give them a chance for the future. And I think continuing to challenge those things is something that I hope I continue to do in the space, and I don't get to a point where I'm just like, I'm okay with, you know, aiming for my bins and my you know, my holiday in the Bahamas. By the way, that's not what I do, but I'm just saying, I just don't want to be that person right now. I just want to remember that this is an important thing. This is an important conversation. Yeah.
Absolutely, absolutely. Is there anyone else that would like to share? What are they doing in their own organization to support diversity and inclusion? You know, how are they actually lifting up as they rise?
Yeah, I'll share a bit about myself. And like I mentioned earlier, I mean, I was fortunate to have someone who looks like me, who was in this industry, and still is. So yeah, that really was really valuable for me. I mean, to a point where I started GCT. So, you know, I'd come to Cape Town once or twice, but even choosing which res should I live in, you know, to have someone who's kind of walked the road that you're trying to get into, who you can kind of use as a soundboard, I think is really a great benefit. So, and I still, to this day, you know, continue to have that relationship with her. And so I think it's truly that representation it matters. It just is. You see examples of people who you think, you know, hey, Tina looks like me, you know, surely maybe I could as well. And I think that's what it is. And just keeping communication open, really. So I try to do the same, you know, with other people as my mentor has done for me. It really can be just a coffee conversation that kind of switches something on for someone. It doesn't need to be a whole formal mentorship or, you know, so I just try and yeah, be relatable, be open, and have those conversations with people.
Thank you, Tina. We've got 9 minutes left. I'll probably just stop there. I think I just want to ask one more questions before I go into the questions. that the audience have asked. And I think maybe just to also add, I mean, there are other programs out there that people can really, take advantage of. I mean, we've got ABSIP, this environment offers you an opportunity to engage. We've just had recently the FAZECA program that's been started that sort of ASISA is very much driving, and there's other sort of like bigger asset managers but more smaller asset managers that are also getting involved to sort of lift up the woman child. So, I think we need more and more of that support from asset managers and, sponsors, which are both male and female, to get that going. One last question, Mandisa, maybe for you is, how is ESG actually influencing fund flows within the asset management industry? And then I'm going to go straight into the questions. I'm already seeing that some of the questions are actually aligned with what we've done. So we should be able to cover them within sort of like 6 minutes, so we can give Christine enough time to close.
Yeah.
Mandisa, over to you.
Absolutely, sure. I'll try and also be quick on this one. So I think on again, it's important to make that distinction between retail and institutional. Within the retail space, that's not something, as Anne-Maree alluded to, that is as important a consideration. Whilst within institutional, we've also found that is something that is significant. I think also there's also a context of globally and locally as well that is different. I mean, globally, we've seen quite a number of policies that have been issued out, which actually now force funds to actually say whether or not they are compliant in a certain way, and obviously there's certain metrics that they need to meet. And from the stuff that we've read thus far, it seems as though everyone is moving towards there. We started off from, this is an ESG fund, this is a non-ESG fund, and from a global perspective, especially in Europe, they're trying to sort of align everyone so that you don't get an ESG versus non-ESG fund. Everything is sort of, you can pretty much tie it into one, because ESG considerations are important across the board. And I think that's important. That's probably something that, we might actually see also drawn in from a global perspective. We obviously don't have that many stringent rules on our side. It becomes a firm by firm thing. Like, for example, with us, we have our own rules to say, we're not necessarily going to be investing in an asset manager if they don't meet these certain criteria. We're prepared to engage with you until you sort of get here. So it can actually be like that, but it's not as stringent as what it is offshore. So I think flows are influenced. Flows are definitely on the positive side. If you're ESG compliant, if there's certain metrics that you're meeting, you find that you definitely get quite a lot of inflows in the institutional space, but not so much from a retail side, as I mentioned earlier. Yeah.
Thanks, Mandisa. I'm going to the questions now. There's about 11 questions here. Please, most of our panelists have committed to staying, so I'm really going to try and make sure that we cover all your questions, but we will try and finish at past, and then we'll allow the panelists to stay on, those that are comfortable to stay on, and then you can ask the questions that you have if you've got more. So please feel relaxed, please engage, ask all your questions. We will make sure that they get answered tonight. So I've got a question here from Temlando Matebula. He's asking, has there been any progress in actually quantifying ESG risks in terms of allocating beta or risk premium to material ESG risk? Any of the portfolio managers want to maybe answer this, please?
Can I give that a stab? I'm going to give a very high level answer to that. And that is to say, almost like everything else in how you value a stock, let me look at an equity, for example, almost every individual investor is going to have a different way of actually allocating risk, quantifying that risk, and the kind of the weighting and significance on that. So there are kind of increasingly standardized ways to look at things. Sometimes people want to put it in risk premium, but it really depends on, and I'll take it back to my initial comment, on what your investment philosophy or style is, and that will dictate how you incorporate ESG factors. And therefore it might not be appropriate to put it into a risk premium. It might be important to put the specific things into cash flow. Sometimes it might be important to put it into a valuation multiple rather. So I don't think there's a one size fits all there, and it will be particular to an investment style and philosophy. But there might be some other voices on that matter.
Okay, great. I think that's a comprehensive answer. I hope Mr. Matebula is happy, or Tim Lanzo Matebula is happy there. I think the other questions is talking about how do you actually balance the returns with the impact? How do you make sure that you actually encourage value in investing for impact? And I think our panelists did allude to that there is no compromise between the two. They tend to actually look at the E and the S and the G separately, and then they tend to engage with the investments that they would with the board of the investments where they actually wish to invest, so that they actually make sure that they maximize the returns. I think also Tina alluded to that as well. So I don't think there's more to be said there. In South Africa, there's an S that matters, yet the focus is mainly on the E. We're currently faced with an energy crisis, yet we are shipping our coal abroad and use less of fossil fuels to reduce carbon emissions. What's your view on this? I think we touched on this a little bit, but maybe, if any of you would like to elaborate on the answer that was given initially. I think Anne-Maree, you alluded to this.
Yeah, I would allude part of the Sasol investment case, for example. They are such a huge taxpayer, contributor to employment in the country. So tax as a form of company tax, but also because of the kind of high salaried individuals that they employ, also in terms of individual taxpayers. And the economies that operate around their collieries, in Mpumalanga. So, we often get criticized because of the environmental impact for holding Sasol, but actually Sasol, for example, cannot actually shut down overnight. They supply close to 50% of the country's fuel, and they are a huge employer. So we look at that and go, provided there is a return to be made for clients, we will hold the share and challenge them and engage. And they have actually managed to think through what would a just transition look like in terms of the speed of running down the coal assets, what are the offset options, because much like any other emerging market, there is a huge social cost to decarbonizing very quickly.
Okay, thanks, Meryl. I think I'm going to stop there and allow Christine to actually close out for those people who cannot stay on further for more answering of the questions that are here, and then we can get back into the questions that are left, and so that we can see whether those questions haven't been answered. Christine, over to you.
Thanks, Masiabi. Thank you everyone for joining tonight. Without your participation, this would have not been possible. And thanks to all the panelists that have come on board tonight. It's been greatly appreciated. I think the discussions and insights that have been shared today has really elevated our knowledge and understanding of ESG and how it's actually been implemented and integrated at an investment decision-making process where there's no compromise in terms of pushing sustainability, but also ensuring that this targeted return objective is kept at the forefront as well. To the joiners of the webinar tonight, this is one of our many webinars we hope to organize this year. And forms part of our key strategy and focus. Our next event is a book review, Awakened by Nonkululeko Gobodo. And please remember to follow us on our various pages, be it Instagram, which is ABSIP_WIF, and our LinkedIn page, ABSIP Women in Focus. You'll also find our recordings available via Instagram and our LinkedIn pages. Thank you, everybody, and have a great night.
Yeah. Thank you everybody. Thank you very much, everybody. And really on behalf of our two esteemed leaders, Nomonde Zwane and Mbali Pajiamole, She's our deputy president. We thank you very much, and we hope you found this insightful. Thank you, Christine. So I'll just carry on with the questions, and maybe Christine, you can also jump in if you find that there's questions that we haven't answered. Let's do it together so that we don't actually take up a lot of the people's times. So I mean, one of the things that you've also highlighted that was a question here was around a male colleague supporting portfolio managers. I think we've covered this in terms of women and what they can actually do to help make a difference in other women's careers. So I don't think I'm going to open up a space for that question to be delved into again. I hope that you are happy with the answers that you've received earlier on. Somebody is saying here, from a retail perspective, there seems to be a lack of education and also especially around diversification and the risk appetite that we alluded to. How do we make sure that then millennials actually get the education around impact so that they've got access to this information and so that they can invest in funds that offer you impact? I think that's a good question.
That's a great question, and perhaps I can sort of step in as well and be like, it's actually really true. I think there definitely isn't a lot of, even when I speak to my friends, they always say, look, I wish this information is something that was taught in school, because some of these things are just basic things that in our space, we're just like, okay, but don't you know this is how it works? And if it's something that's going to generate income or that's going to help you generate wealth, surely this is something that you should have been taught. And so I think this does mean that we do step out of just our roles and we do the extra. I think Tina spoke about opening up her space and allowing females, to the previous question, to also, kind of tackle the previous question as well. You allow females to get into your space to ask you questions. How did you get there? What subjects did you study? I think those kind of things are important. And that also does mean that perhaps we also do the same. We go to our millennial friends and we're just like, have you invested? My first role was literally that. I had to, I was in the client servicing sector and I had to talk to everyday investors about investing. And, we would even be asked, I speak quite a number of South African languages, and I would be asked sometimes to explain investing in Zulu or Tswana, and it was sometimes so frustrating because you're like, how do you say unit trust in Zulu? Unit trust, but it's not, and put me in a space where I had to learn how to explain it. And I explained it to my mom and my grandmother, my grandmother who grew up, and her job was as a domestic worker. And I had to explain it to her in a way that she understood. And I was like, do you understand why this is important and the difference between saving and putting money away for a funeral into a funeral cover versus investing? She'd be like, okay, explain again, Mandisa. And I did that. And I think it just takes, it's work, guys. The honest truth is that it's work, and it's work outside of our spaces. It's not going to be enough for us to say, we probably do this in the 9 to 5. I think in order for us to really close the gap from a financial education perspective, we need to step out of our 9 to 5s and offer our times like that.
Yeah, thanks, Mandisa. I'd actually like Tina to step in here because, I mean, Tina, this is something that we also get, we are faced with quite a lot. I mean, given our focus areas, what has been sort of our responses just around looking at a CIS way of offering our products? I think that could also lend itself to some education to the people who are actually listening in today.
Yeah, I mean, just listening to Mandisa, I was thinking of, we often have report backs to clients where they will ask us, yeah, I have a niece or nephew who studies at X university, and this is where most of our beneficiaries are. What are you doing for that city? So it is real. So I think, I mean, for example, we as Future Growth, one of our shareholders is a bursary trust, Imfundo Trust, which provides bursaries to previously disadvantaged people, regardless of sector. But I think education really is the key, as corny as that may sound, but it's corny for a reason, because you need that knowledge to know what's actually out there. And I think, as I'm from the Eastern Cape, there aren't as many opportunities, for example, than Cape Town, Joburg, but to actually have that exposure is key. And perhaps there are girls out there who don't actually know these things. So I suppose even going to things like social media, sharing these things with the people that we interact with. I
Tina, I'm
really think
talking
it's
more
like a
practically. Oh, sorry. I'm talking more practically around. Sorry, I'm talking more practically around the CIS, sort of structure. So our infrastructure development bond fund, could a retail person actually access it? And what are the challenges that you get faced with?
Our funds, we only have institutional clients. So I don't think from our perspective, directly addressing that would be possible. But I think it's in the investment decisions we make ultimately that benefit the actual beneficiaries that our clients, are investing their funds on behalf of.
Yeah. And I mean, from a paper perspective, also from an administration perspective, we can't actually get, paper. We won't be able to report on a daily basis because CIS requires liquidity. So, it becomes very difficult from an administration perspective to be able to provide sort of like the CIS version of our infrastructure development bond fund. I mean, it's something that we are investigating, but I think we do need, a legislation. We do need support to come to the fore for us to be able then to roll out those kinds of funds to just, the man on the street. So, because at the moment it is quite challenging for us to do. Yeah. Okay, thank you. And then social and economic inequality in South Africa is big. How does this factor into your ESG analysis of companies operating in the country? And how do you work to mitigate any negative impacts of your investments? I think it was covered, but I don't know if there's any sort of additional information that you'd like to share. How do I land a job or internship as a newly graduate? Do any of you want to answer this question?
I'm always interested to meet keen individuals. I think maybe a more important question is what should one look for, or how should one prepare rather? So I think it's tempting, first of all, it's tempting to wait for an opportunity, for a vacancy. I would say do not even wait. You've seen 4 individuals here now on this, look us up on LinkedIn. Don't send me your CV, send me your portfolio and your investment thinking. Send me a research report on a stock that you find interesting. Look at my portfolio and tell me why you think it's wrong. It's about demonstrating that passion for investments. So I think someone else mentioned they landed in the role by accident. I landed in this role completely by accident. I was investing personally, and someone, I didn't even know this was a job. Someone noticed that, so I think that's what I really want to see when I'm looking for people. It's people that are not waiting for me to hire them and then teach them about the market. It's actually people who are already trying to figure out, even if it's basic, figure out the markets for themselves. Even if it's a paper portfolio, if you don't have the money to start a real portfolio, start a paper portfolio, but demonstrate that you are already doing what you can with what you know.
Yeah. Powerful. Thank you. And then Anonymous is saying, how do we ensure that investment management firms bring tangible inclusivity and transformation? Having a number of females in support or assistant roles and not managerial or decision-making roles does not empower or drive transformation. So how do we encourage tangible inclusivity and transformation in this regard? And what have the panelists done to drive transformation in their roles? Anonymous, I think we've covered this question. Mandisa sort of talked about quotas, something that is tangible, that is measurable, and that is monitored over a period of time to ensure that it is happening. We also talked about how these women themselves are thinking about what they can contribute, how they can mentor other people so that they can actually rise as well. Nomondes was saying there, is there anything else that anybody would like to add?
If I can just add to that, Masiabi, I think this is a very good question, and the conversation has actually evolved, like what you said. This was something that we were looking at quotas, but as the conversation evolved, we actually realized that even the people that are meeting the quotas, when you look at where these females sit, it is in these support assistant roles, and sometimes they'll even put the cleaner there, and they say we have this number of females. And I think eventually we're just like, wait a minute, we're concerned about we have had to be very distinct now and say, we're looking at your investment team. We're not now going to be considering, although those spaces are important, I think for us, we're trying to make sure, and we also even look at things like training up of people, not just hiring the same people, because then we end up, myself, Tina, Meryl, Anne-Maree end up just gravitating around the asset management field, I guess, or the corporate structure, and it's just us that are being utilized. We're moving from one firm to the other. We want to actually see evidence that there's also young people that are also being grown up as their own timber. So it's not just the same people that are getting jobs, and it would be tragic if that's what it would end up being. So just to say that the conversation actually evolves, and it's subjective, and perhaps maybe a year or two from now we might realize something else that we didn't pick up because for some reason some people find a loophole, and then later on we're like, okay, wait a minute, we need to adjust this so that we make sure we get to our end goal. So yeah, it's always evolving, and very, very good question.
I can add as well. I think the representation thing is important. So someone mentioned that, we mentioned a few times. So to me, my message to our internal leadership and HR, etc., has also been focus on keeping the Black and female talent that you have, first of all, because I think the critical mass is important. Once you hit a certain tipping point, I've seen that from a racial point of view in our organization, and we have probably more work to do on a gender perspective, but the climate in the room just changes. It's something where you just can come to the office and it's just a little bit easier to do your job because you can just not be yourself and stop worrying about fitting in, to be honest. So I have felt that as the organization has transformed from a diversity standpoint, as I said, we definitely have more work to do on the gender point of view, because in some rooms I am still the only female investment professional and certainly the only female fund manager. But I am now in the position to hire people. So I need to take that responsibility quite seriously and look at, really think that through. If it's possible, if all things being equal, if it really is possible to hire the female candidate to do that. And if all things are not equal, but it's workable to still do that. And to train, because I think also you have to take into account how people show up in interviews even, and the confidence levels that we inherently carry because of our socialization as girls, etc. Like these things all matter. So I think, do you do a brief interview process or do you do something quite diverse? So we tend to have people sitting with pairs of people. We do a combination of written things, presenting, being in front of a panel, having lunch with the team, so you really give people time to show their true selves and get comfortable. So I think that matters, but keeping the people who are there and is so important. So it's something that I did last year was just to actually get all the female, either analysts or fund managers making investment decisions on behalf of funds. It was a little bit controversial because we excluded the support people, we excluded the client people, but actually saying these are the guys that are bearing the responsibility of investment decisions, female only. Let's get, who are those people in Omega, and can we get into a room for dinner? We did this just after Women's Day. Our MD kind of sponsored this at Mutual House, and it was to say, because women neglect networking, because we've got to go home and we've got to like put the kid to bed or do whatever. So we neglect networking, and it's often easier to approach someone who looks like you and to ask your dumb questions, or just even share a problem that's maybe related to softer issues, and you feel more comfortable raising that with someone who you can relate to. So my objective was, can we actually just get the women, as few and far between as they may be, who are in investment roles together in one room, so that you can establish those relationships, and the coffees and the mentorship relationships can flow from that. Yeah, you do need that layer of male sponsors, and we do have that, but I think we just have to accept that you're probably going to carry an abnormal load of mentorship over and above like your day job. And don't forget to be excellent while you're doing it, because you cannot give anyone an excuse to say, oh, women do not perform.
Absolutely.
Thank
you, Meryl.
If you wouldn't mind, I think we chatted earlier about the importance of remuneration with respect to our investments, and it equally applies here. So KPIs in managerial for managers, and KPIs that are not just have them as your most junior, have women as your most junior staff, but actually have women progress through your team. And we've seen the benefit of that type of structure, and that is deliberate, tangible goal, not necessarily quotas, but how are you progressing? How are you grooming? How are you training? Do you have a career path for them, etc.? And then the second part of that is equally remuneration with respect to keeping the talent. So identify the females that you think have the potential to excel in this career, and give them deferred bonus structures up front so that you hook them in, so that when the going gets tough, there's a reason to stay around, and there's a reason to stick things out. And that's also an indication to them that they are valuable and you want them to stay. So they're creative ways to do that as well. So I think that's another layer within the REM realm that I think we can use as a tool in terms of keeping women and making sure that they rise up the ranks.
Excellent. Thank you. Thank you.
If I can just add to that, from a future growth perspective, so 38.9% of our shareholding is by Black women. We had a recent transaction in last year, 2022, where AIH came on board as just over 20% shareholder. So I fully agree with what the ladies are saying. It's about, getting actual ownership. Let's not just see, representation in the lower ranges. It's all through the sort of organizational structure, right through the way to shareholding as well. So I think that's key.
Okay. Thank you for that, everyone. Okay, so let's see further questions.
Masiabi,
yes, Chris.
we have. There's a question that's directed again to ESG from a viewer, Sitembile, in terms of greenwashing. And is it a big issue among South African companies? And if so, how does one avoid investing in companies with an inflated ESG rating?
Thanks, Chris.
You're welcome.
May I go ahead here? Oh, Meryl, go ahead.
I'll be brief. I think, I would caution investing purely based on the ratings, basically. And one has to dig deeper in terms of the more specific I think people are in terms of their targets and their commitments. That to me shows an intention to be willing to be held accountable at the very least. So I think the granularity of the disclosure is a good indicator of intentions. And we then do measure how companies are progressing against their targets. But if you're looking through an integrated report and there's just a lot of fluffy words and no actual tangible targets that people are putting out there, I would see that as a big red flag. And sometimes the ESG ratings are not sufficient to pick that up.
Okay. Excellent. Thank you for that, Chris. Maybe just a couple more questions our left. I think we don't have many more, which is great. And thank you so much, ladies, for sacrificing to stay. I think Nomonda's just making a point there. Representation is key. It takes daily intentional actions to arrive at transformation. So we need to be intentional about it. Somebody asking which skills are going to be there to equip them, outside the degree that they've obtained. Meryl, I think you touched on this in terms of, do like a mock portfolio manager management, have a mock portfolio management portfolio, have a mock portfolio of stocks or whatever it is, and putting it together and being proactive about, positioning yourself in front of other asset managers. That could be one way to showcase that you are quite intentional and that you are hungry for this. Is there any other ways that you ladies would like to add towards this?
I think maybe the one way I would add is, especially if you're not in a role currently, but you're in, you're fortunate enough to be able to study something, I would say definitely get skilled up in Excel skills. In general, this is, again, I'm generalizing, but women are not deemed strong when it comes to the technical skills. And I think unfortunately, you sort of need to prove that isn't necessarily the case. So I would say if, there's any way in which it's not necessarily Excel, sorry, I used Excel as an example, but it can be any other program or technical skill that you want to develop, which ties in with the financials, with the financial industry. I think that will definitely benefit you. This is obviously to someone who's sort of just kind of waiting for a job, but can actually study. I would say that's a nice skill to have.
Okay, thanks for that. Any other skills, ladies? Maybe even CFA, as a degree, or to say outside of studying. Maybe also, I know that there's also other programs that you can have in terms of communication, because sometimes you might actually find that people can be very technical, but they can't actually sell their idea. So it's quite important to just bring it down. Even if you're like very astute, try and make sure that you can bring down your idea so that people can actually understand what you're saying. Because if you can be able to articulate it better for people to understand it, people want to have you in front of them because you are, that you make it easy for them to understand. Because a lot of the pension funds, they're not complicated people. So if you're a smart person who can engage with sort of like professionals at that level and still be able to bring it down to just the normal people in the room, I think that is an absolutely sellable skill to have.
I can add to that. Hope you can hear me. It says my internet's a bit. I think it's also just to read widely. So if you're gonna, again, be in front of me or trying to sell yourself, knowing what's happening in the world, in the markets. So some publications, provide some of their articles for free, a certain number of articles free per month. Bloomberg, Wall Street Journal, Financial Times, The Economist. Most of these guys have podcasts these days that would summarize their key articles, the front page articles, absolutely free. Economist has a whole range of, so, be current, following key investment podcasts in whichever field of investing you're interested in. There's such a wealth of information. Global and local fund managers write things on a quarterly basis. And I think that also helps with examples of how people distill very complicated ideas into very simple, explainable, understandable terms. So just read widely, read the Ray Dalios of the world, the Howard Markses of the world, who are writing things quarterly, and your local Alan Gray's 91s or Mutual or Coro and the smaller boutique firms. Everyone is writing. The more you immerse yourself in that world, the more you will come across like you fit into their world when you sit across from them.
Yeah.
Thanks. Meryl's point really resonates with me. I would just also add to that, be curious about everything. I mean, this is the wonderful thing about asset management, is it's just the world of investing is the world we live in. So the more you know about almost anything, I can guarantee you that there's a relevance, and you also show other people that you are able to onboard knowledge, distill it, use it, understand it, that you can be excellent in something. So whether you, I mean, at one stage I got a qualification as Pilates instructor, all of these things, they showcase, that you have the ability to be disciplined, you have the ability to understand the power of knowledge, that you can demonstrate excellence as well, and really don't think anything you do goes to waste. People working in my friends working in other industries, they'll often say, oh, when do you knock off, are you going on leave? I said, well, normally when I'm working, I sleep with both eyes open. When I'm on leave, I only sleep with one eye open. Relevant to my job all the time, and that appreciation that almost everything you're doing all the time, and everything you see, you walk around, you hear what people are doing, you see the consumer patterns, all of these things, everything is relevant, and really don't take that for granted.
Yeah. Okay, somebody asking here, what advice would you panelists give to young emerging investment or asset management companies? I'm not sure what this is related to. I don't know. Maybe it's potentially just related to ESG, or it could also mean, what advice would you give to maybe young or smaller pension fund businesses as well? So maybe just try and link the two. Any advice, I suppose. Maybe let me try and be controversial actually with regards to this question. So one of the key sort of like topics at the moment is around, there's a plethora of Black asset managers. There needs to be some sort of consolidation, based on your reading and your curiosity. I mean, do you believe that there should be sort of like consolidation within the Black asset management industry, and especially as it relates to, their incorporation of ESG into their investment propositions?
I will venture into the controversial. Yeah, so I think the active management space has been under pressure for at least a decade now in terms of being disrupted by indexation. Why? Because of fees. So we can thank Jack Bogle for starting that trend 40 years ago, and it's catching up. So I think whether you want to talk Black boutique firms or just the industry as a whole, we've seen ongoing consolidation in SA and globally as well. And I think it's as a result that actually of something good, that the end client deserves better value for money. And the best way to achieve that actually is scale. So I think the consolidation is a natural consequence of where we are, of being in a mature industry that's now got kind of a substitute in the form of indexation that is driving a natural survival of the fittest, and ultimately probably survival of the, dare I say, the cheapest, but value for money. Because I think people have cottoned onto the fact that over time, the compounding effect of what they're paying away in fees, it's actually eroding their long-term wealth. So I think smaller firms have to really think through how are they still going to deliver value to clients.
Okay, thank you so much for that, Meryl. Anyone else want to add on to that? I think maybe just to add on to that, my question would be around offshore. I mean, we've seen now with Regulation 28 having changed, 45% of assets can actually go offshore. I mean, what does that mean, for asset managers that are onshore, but that actually offer that, globalization, specialization? Are they going to, be wiped out of the industry because now the universe is so much broader? 91, maybe you should comment, although you are quite a big asset manager from that perspective.
It's a really interesting discussion because obviously we have a variety of teams within the business. And then obviously you have this London hub as well. So maybe I can talk for our team specifically, the SA Equity and Multi-Asset. We have always had the capability of analyzing and investing in offshore stocks. And so really it is just extending the breadth of what that means. So it's not investing in a fund offshore, it's investing in actual stocks analyzed by our team as well as our London team, and we leverage off of each other. And so for us, I think it's a bit of we're in a unique position in that sense. Many other players, they have two-person office offshore, or they're investing in a fund and they don't have direct line of sight. And actually for us, explaining that and articulating that we have direct control over currency at any one point, asset allocation at any one point, actual stock selection at any one point is quite different compared to investing in a fund, which you potentially can only rebalance at particular points in time. And then there is obviously the fact that there's a 100-strong plus investment team assisting in the actual investment process there that I talk to on a daily basis. So I kind of feel like asking us that question is a little unfair, because we are structured a bit differently as a global business. But we are feeling the pressure, because sometimes the easiest way for a pension fund or the consultant to manage it is just to carve out that percentage or that proportion of the fund and allocate it away. Our argument has been that that's not necessarily always the best thing to do, as you don't have full control and full sort of look through line of sight and those levers to pull at all moments in time when the market is operational. So I can't even remember what your question was now, because I've just
it's okay.
But it does have an impact, because obviously if boutique asset managers can't accommodate that, it means that asset consultants are just offshoring that money to a fund offshore, or a company offshore. And in terms of the broader picture, I don't think that's good for our industry. I think there needs to be a little bit more, or there should always be nuance. And I think, as with everything, when there are changes, there are going to be teething problems, or there's a process of teething. And I think we'll find a balance, hopefully, that meets the requirements, but still serves the entire sort of ecosystem well.
Okay, thank you, ladies. One last question before I go into the sort of positive comments that have been made here. Is there a relationship between ESG policy and the performance of the JSE listed companies? And if there is, the person just wants to know, where can they find this data? I'm assuming that this person is doing some, degree or, master's degree, and they're trying to find, information for their thesis.
So since I've got my mute off, let me have a stab here. There are a few ways to look at this. You can look at some of the indices for the JSE Responsible Investment Index. You can look at some of the external ratings potentially as a guide to get some of that information. But it's very difficult to say. I'm not sure what this person meant by ESG policy. Firstly, I think almost every company listed has some sort of sustainability policy. The quality and the implementation of that policy is a whole nother ball game. So I think measuring companies by, do they have an ESG or sustainability or climate related policy, is maybe it's a necessary measurement, but it's probably kind of the first step there. Using ESG ratings, the likes of MSCI, Sustainalytics, those sorts of things, to have a look to kind of as a proxy for ESG performance. There are many types of results that you can get from using data like that to look at performance. So global studies, local studies have shown that you can take two sets of data from third parties, and their portfolios based on ESG ratings will yield vastly different outcomes, both on an ESG front and on a returns front. So to go back to what we discussed before, is that this ESG consideration or integration factor, there's not a standardized version of it, and it really needs to be applicable to the goals that you want to achieve and the investment style that you have. I hope that sort of answers the question. I haven't given a neat answer, like you can go.
I think you've answered it exhaustively, and maybe Anne-Maree, you know 91. So maybe if you want to ask questions, maybe you can direct it, as Meryl said. Don't wait for people to come to you. Be brave enough and courageous enough to ask the questions, seek for the help, and maybe something can come out of that. Okay, ladies. I just want to read some of the great things that have been mentioned here about you. Thank you for the well-moderated panel discussion. Much appreciated, Awif. I think the person also meant to say thank you to the panelists that have been so great, made it easy for me to moderate. So thank you for that. And then the other one is thanks, Awif, for this fantastic conversation. Another person saying, thank you for a fantastic webinar, ladies. This was very insightful and so fun to listen to all of you. Greatly inspired by each of you. Flourish further, ladies. Thank you so much. You guys are amazing. And just from my own personal observation, your personalities are just so different, right? Some of you mellow, some of you very energetic. However, you have found your own voice, you have found your own way of promoting what you do, for following what you do, following your passion. So it means every professional woman that is on this webinar, doesn't matter who you are, doesn't matter what color you are, doesn't matter how you come across, do you, and you can be as successful as these women who've been here today, portfolio managers holding their own and saying, come on, you can do it too, and all of them are vouching for you. So thank you so much, ladies, for gracefully staying on to answer these questions. I honestly cannot wait to personally engage with you again. No Monde, we have been challenged. Let's organize a time for women to come together, to sit around the table and see how we continue to actually lift other people as we rise. God bless and have a good evening. Don't know if there's anything further that you'd like to say. And if there isn't, I'm going to hand over to Christine and really just close off that webinar.
Thank you, Masiabi. Just a quick apologies from Mandisa. She's actually had issues again in terms of load shedding, so she sends her apologies, but definitely expresses her gratitude and enjoyment with the discussions that have taken place. And a big thank you once again to everyone that has joined and all the panelists for the enriching discussions, for your passion for investing that has come through so strongly, as well as for your thought leadership in regards to ESG and the implementation thereof, and for really just putting women power at the forefront. Thank you and have a great evening.
Thank you so much. And to all the people that have stayed over, I mean, we had over 100 at some point. We're sitting at 33 still. Thank you so much. Have a good evening. God bless. Until next time. Bye.
Bye.
Thank you. Bye.
Bye.